Fannie Mae, one of the largest mortgage investors, updated their economic forecast with new predictions of mortgage rates, home sales, and more. You're gonna wanna see what they are now predicting based on the new data that has been coming in. So stick around. Get this, California ranked number 3 most volatile market for home prices. Are you surprised? I'm sure most people would be, considering the amount of equity people gain from owning a home here over time. But data is data. I'll share with you how we ranked so high and how this could affect you if you own a home here in San Diego. This and more covered here in this week's San Diego Market Matters, and I'm Karl Kyler, your San Diego Realtor. If you're enjoying the updates that I bring you in these weekly market reports, show some love by liking this video and subscribing to my channel. And if you're thinking of selling or buying a home here in San Diego, I have my contact info in the description below. Let's connect and see how I can help you make your next move. Now, let's get into the good stuff. Market check PCE, the Personal Consumption Expenditures Report, the main one that the US Fed manages and monitors, reported this last week, and good news. PCE came in not only as expected, but it inched down, which is the first drop we've seen in a few reports. In addition, job loss claims reported this last week slightly higher than expected at 242,000 in total, about 20,000 over expectations. With that being said, this is the third week of interest rates holding sub 7%, closing this last week out at 6.74. This is definitely going to provide a little bit of relief for buyers that are currently in the market.
Thank you!
Now, let's dive into the Fannie Mae's updated forecast for the real estate market. In the latest economic outlook from Fannie Mae, there's a lot to unpack about the future of our housing market. First off, let's talk about mortgage rates. Fannie Mae now expects the 30-year fixed mortgage rate to average around 6.8% through 2025. That's a slight uptick from the previous forecast, and this is because of the stronger than expected economic data. Despite the upticks in rates, existing home sales are looking up. Fannie Mae revised their outlook slightly upward after the unexpected strong sales performance at the end of last year. However, they are cautious about 2026, expecting that a slightly higher mortgage rate might slow down sales due to reduced affordability and the lock-in effect, where potential sellers decide to stay put because their current mortgage rates are more favorable than what they'd get on a new purchase. New home sales, essentially new construction sales, also got a nod in Fannie Mae's report. There was a rise in December, and while the forecast for new home sales has been adjusted slightly downwards due to the higher mortgage rates expected, the market segment is still anticipated to outperform, meaning they'll continue to go up, just not as much. This is particularly relevant for San Diego, where new development continues to be a very hot topic. The adjusted forecast is a reminder of the delicate balance between building enough new homes to meet demand and the economic realities that can influence the new construction market and sales rate. On the construction front, single-family housing starts are looking promising in the short term. Fannie Mae adjusted their forecast upward slightly following the strong December numbers. This is good news for the market because despite higher costs, i.e. mortgage rates, there's still a drive to build. Multifamily starts also saw an upward revision, supporting the view that demographic trends will continue to support apartment and condo construction, particularly cities like San Diego that deal with an ongoing need for more housing. And lastly, let's talk about their home price forecast. Fannie Mae isn't set to update their home price forecast until April. Their last projection saw home prices growing at a steady clip, with a forecast at 3.5% of an increase in 2025. It'll be interesting to see if they stand by this come April, especially since they've revised their forecast for mortgage interest rates to be slightly higher. Keep in mind that these forecasts from Fannie Mae are national. Every month, I'll keep you updated on how sales and such are coming along for San Diego specifically. Nevertheless, it is always a good idea to understand how the outlook is for the country based on the data as a whole. Now, let's make our way into the recent article ranking California as the third most volatile state when it comes to home prices. Recent analysis shows California is the third most volatile state for home prices in the United States, trailing only behind Hawaii and Vermont. The Federal Housing Finance Agency notes that California experienced its most significant annual price surge of 27% back in 1977. More recently, during the 2008 Great Recession, prices plummeted by 23%. These dramatic shifts outline a market full of potential, but fraught with risk. If you are not a fan of the equity roller coaster ride here in California, check out Kansas. Kansas lands on the opposite end of the spectrum. It's known for its minimal price fluctuations and represents a safe haven for those who value more stability and predictability. Despite the risks, California's market volatility has historically paid off. Over the last 49 years, home prices have grown at an impressive annual pace of 6.43% averaged out, substantially higher than the national median of 4.7%. Bottom line, if you can ride the California wave for long enough, you will benefit, and this is the golden rule of real estate. Buy, hold some more, hold a little longer, and win big. In essence, while the potential for high returns exists, the unpredictability of California's market requires careful consideration and planning. Whether you're buying your first home or investing in the market, understanding these dynamics is good to know before making any big decisions in our market here. In conclusion, the volatile nature of California's housing market presents both opportunities and challenges. Being well-informed and strategically prepared can help you maximize the benefits and mitigate the risks as you navigate through San Diego's dynamic real estate landscape. And that's a wrap for this week's San Diego Market Matters. Thanks for hanging out with me in this video. If you enjoy what I bring to you in these videos and haven't subscribed yet, consider doing so now. But if you are still to be convinced, check out some of my other content that I've already posted. This video here is how you can accelerate the growth of your down payment for your next home purchase, as well as this one, which is a full breakdown of why we will not see a market crash anytime soon. As always, I'm Karl Kyler, your San Diego realtor. I'll see you in the next video.